Choosing the right forex broker can make or break your trading journey. With so many options out there, it's easy to get overwhelmed or scammed. In this video, I will break down the essential factors you must consider when selecting a reliable and regulated broker. Whether you are a beginner or looking to switch platforms, I will show you exactly what to look for to protect your capital and trade with confidence. Let's get started. So we are going to look on how to choose regulated brokers, and I know this is a problem for many people. So let's take example of this broker which I'm using is Tickmill. The broker's name is Tickmill. You can go and search it. So there are four things I want you to look of when you're choosing a right forex broker. So the first thing I want to look of is swaps. I know many people wondering what are swaps. Let's get simple. Swaps. What swap means? Swaps means is quite simply swaps are overnight interest charge that a trader must pay to hold a position open overnight. Do you know that you pay the broker when you hold a position overnight? For those swing traders, you can look at your account. You see maybe negative 0.18. This is what are called swaps. When a trader wants to keep the position open, they will pay interest on the currency sold or receive interest on the currency bought. You see, when you hold these swaps, it comes in two ways. The broker might pay you, or you can pay the broker. It depends. So the swaps are derived from interest rates from countries involved in the currency pair. So how are these swaps? How does the broker measure these swaps? Whether to pay you or to cut it from your capital. This is derived by interest rate from countries. You all know what are interest rates. So interest rates are what make swaps, whether the pair is going long or short in the on the current market conditions. As I said, whether you are going long or short, so it depends. When you are going long, that the broker pays you. When you are going short, do you pay the broker? So let's go. Important of swaps or rollover rates. So you can call it swaps, or the other name you can say is rollover rate facts. Okay. Swap rates are applied at 0.05 from time. So this swap of rate are applied at the beginning of the day, at the beginning of another day. So whenever the day ends, the broker charges you, or it's either it charges you by paying you or you pay the broker. This depends on the interest rate you're holding on the currency pair. We'll talk about it more. Each currency pair has its own swap rate, you see, and is measured on a standard size lot of one lot. So each as I said here that each pair has its own standard has its own swap rate and is measured according to a standard lot. So for example, if the swap rate is maybe 8, so it depends on a lot size, the broker is going to charge you. Okay, the other thing is say that swaps are applied each night onto your opening position, and when the position is left open, it's given a new value date. You see, each night swaps are charged as it said earlier. On Wednesday night, however, the new value of date of the trade held on open is charged to Monday. Due to these swaps are charged at triple the rate. Okay, so on Wednesday, due to that, there's a weekend on Saturday, Sunday. So this means that the market is not open on the weekend. So those rollover rates, those swaps rate of the weekend will be charged on Wednesday. So on Wednesday is either the broker pays you pays you three times triple, or the broker charges you triple rate of holding that pair. So it depends. Okay, so let's take a look at what I mean by when I say swaps. Let's take a look at swaps. Let's take a look at swaps. Okay, here example of swaps. Let's start with the forex swap. You see, for example, let's take a look like the most traded pair, something like the Euro USD. I know this among the pairs which is most traded worldwide. Let's take a look at the Euro USD. Euro USD, a lot of pairs. Let's take a look at the Euro USD. Okay, guys, the Euro USD. Here it is. The Euro USD. See, Euro USD. Currently, when you go long on the Euro USD, you pay the broker -8. But when you go short, the broker pays you 4.9. So when I show this, you don't go just to the Euro USD and start shorting it. You must look at the factors. Like currently, what is going on? The USD is a long position. So please check out my videos. I'll keep the link in the description. Check out my videos my weekly forecast and the official video where I explain the USD from the central bank policy down to the technical analysis to the COT data and everything. So right now we are buying the USD. So meaning when you're buying the USD, the broker is going to charge us a negative rate depending on your on your lot size. So if it is a 0.01, it means that you'll be paying the broker 0.08 each day. Understanding, but don't worry. There, don't get frustrated. There are ways to hedge this risk. There are ways to hedge it. I'll talk it in my other videos, and you can look my other videos, the Euro USD videos. I'll keep a link in the description. The gold video in my weekly forecast. There are ways to hedge this. So and here in the while we're talking about swaps, it says something about the interest rate. This is charging according to the interest rates here. Say this is charging. So the swaps are derived from interest rate of the currency involved in the currency pair. So let's take a look back at the USD. Let's take a look back at the Euro USD. Let's take a look back at the Euro USD. USD. Currently, the euro interest rate is at 2.5%, while the US is at 4.5. So this shows that the USA has got a big interest rate more than the euro. You understand me? So that means that's why here it's likely you'll see that when you go short, the broker will be paying you than when you go long. This is due to the difference in interest rate, whereby the euro has a small interest rate compared to the USD. The USD's interest is high. Yes, its interest is high. So when you sell the euro USD current like now, when the our trade passes another day, slips to another day, that the broker will pay us. But there's no room to sell right now the USD. It's a room to buy. So take a look. But unregulated brokers, the difference between regulated brokers and unregulated brokers. Unregulated brokers will either you are going long or you are going short, they will charge you. That's the difference. They are not transparent. So whenever you're looking for a trading platform to trade with, you must look for a broker who is transparent. Transparency, transparency. And how do you get brokers like that? It's by doing research, looking for brokers who pays you according to your value. Okay, let's quick look at other pairs, maybe like yeah, let's look at the USD ZAR, USD South African Rand. You see, currently the USD rate is at the USD when you long the broker, you pay the broker 1.86.9 when you long, when you buy the euro, the USD ZAR. When you short the USD ZAR, the broker pays you 73.6 swap. So what does it mean? As I said, this is a difference in currency rates. South African central bank policy interest rate is at 7.5, while you look at the USD is at 4.5. So there's a big difference out there, a big difference. So it means that whenever you sell the South African rand, you not only get profit, but the broker will also pay you. So this is one means of hedging. For example, right now you're trading the USD and you trade the South African rand. This means that when the broker is when you're paying the broker in the USD, you come and you'll fix and you compensate with this short in the USD ZAR. You see. So in the USD, the broker was charging you a 8, -8 when you go long. And if you come to sell the USD ZAR, the broker will be paying you 73. So you see, you still have a way to preserve your capital and this and you grow your capital. This is one way of doing of a risk management and protecting your capital. So a good broker will show the means of protecting your capital. But unregulated brokers, for example, in the USD ZAR, go and do your own research. In the USD ZAR, you see when you long, you'll be paying the broker. When you short, you'll be paying the broker. So when you look at your trading platform, when your trading platform has something like that, that is not a good broker for you to trade with and to keep your capital on. So this is the thing I'm telling you about interest swap. So I want you all to do a research, look at your trading platform you're using. If it doesn't offer you swaps, as I said, swaps the difference between interest rates. So such maybe other pairs maybe like maybe Audi JPY. Just look at Audi JPY, Google is Audi interest rates, Japan interest rates. Currently the Audi interest rate is at 4, 4, 4.35. Okay, look at the JPY. JPY now its interest rate is at 0.5%. So what do you expect that when you're going long on the Audi, the broker will pay you than going short, but just don't go long directly because the broker will be paying. You must look at the macroeconomic data, fundamental factors. This will help you to go long. So sometimes the fundamental factors will not support you, will not support. So you can still be paying the broker and you hedge it by looking for another pair that the broker will be paying you, as I showed an example in the Euro USD and the USD ZAR. So let's take a look at the other thing. Let's take a look, guys, at leverage. Let's take a look at leverage. Leverage. So swaps, I know you have understand about swaps. Do your own invest in research and investigation that the broker using. If the broker doesn't offer you swaps, if the broker charges you swaps and swaps which are not reasonable, this is not the right broker. As I told you, search for interest rates between those countries and understand, or compare them with this broker which I'm showing you. Okay, let's look at maximum leverage. This leverage is the amount of the money the broker pays you when you're entering into a trade. Let's take a look at, like, what is leverage. Technically, leverage is where a trader has a large sum at their disposal while using a significant small amount of their own funds. You see, they effectively borrow the rest from their broker. For example, you are trading with a 1.100 leverage and you have 1000 USD in your account, and you have got a, and you have got a 1100 available for the trading. Although this sounds like an insane good opportunity, you must always remember that it's a double-edged sword. When you are trading with a large amount as leverage enable you can open bigger position and potentially earn profit. However, with big positions, you can also have a higher risk whereby your losses can be higher. So here's what I mean. A lot of people when they are trading, they go for high leverage, 1.200, 1.2, let's say 1.2, yes, let's say 1.2, 2000, 1000. This is a lot of leverage. Means that you are risking your capital to potential. You know, the main risk, the main theme of a forex trader is capital preservation, risk management. So high leverage leads to higher loss. Yeah, you can have profit, but when it doesn't go to your way, what you lose a lot of money. So, for example, in the USA, a regulated broker is supposed to have a maximum of 1.50 leverage. You see, so means you must have a good capital in order to cope with the leverage. So in this, some of other countries out there, leverage is they give traders a large leverage. So this tempt traders to use this high leverage. So even losing your capital is going to be in a short amount of time. You see, you keep your capital today, you lose it tomorrow. Why does you lose your capital tomorrow? You say, oh, I don't know how to trade. Yeah, trading, you must know how to trade, but there are other factors affecting that. Some of these factors are leverage. So see here, Audi card maximum leverage is 1 ratio 1000. But my advice, your leverage must be 1 ratio 100. Don't exceed that. 1 ratio 100. 1 ratio 100. But for me, I trade 1.50 leverage. That's my maximum leverage. But when you go along, your leverage must not exceed 1.100. This is good for capital preservation and growth. You know, no, trading, guys, is not a gamble. It's a business like other business. You're investing, you want return on the profit. So what will you do to protect your profit? Avoid risk. No? Avoid silly risks. So this is what you do to avoid silly risks. Leverage. So as I said, swaps, leverage. Okay, let's go to let's go to the third part which was talking about. The third part you're going to talk about is the contacts. As you see, the thing we're going to talk about is contacts. Most of brokers doesn't keep it, don't doesn't keep their location, their contacts. Yeah, you can have contacts, normal contacts as always, but look for something that, if you're trading to a broker, the broker must have a legitimate office, a legitimate number where you can find that broker. For example, this broker here, Tickmill Limited, for example. Let's look at this limited Eden Plaza. You see, its number is here written, client hours 7 here, registered address here. This is the office where you they have the office. You see, they have the office. This Eden 3 F28 F9 Eden Plaza, Eden Island, Mahe, Seychelles. You see, this is the office. So you can they have a registered office where you can find them. They're not just an online broker. When you want to talk to them, you just talk to them through their online customer service. You have no their regular phone number, you don't know where the office they are. So you must consider things like this. You see, regulation is under the license, you see, the registration number, everything. Look at this one here. That's got also a branch in South Africa. For those living in South Africa, you see the number, so you see everything. Client official address Johannesburg, Gauteng, register number, the office here, West Street, Santon, Gauteng, their number. So this is where the office in South Africa is. So if you have got any problems, you can go directly to the office, registration number of their company. So you can look for, you can enter the South African registration of companies and search this company. Is it officially registered with the South African companies, you set this number, you see the company is there. The company is transparent. Always the broker must be transparent. Whenever you're trading to any broker, the broker must be transparent. That's what I say. The broker pays you sub. The broker advises you on a good leverage. The broker shows you where you can find it physically. Physical, not online. Physical. That's what I say. You see that keep the office address and everything physical. Okay, let's take a look at the last thing. Let's take a look at the last thing. And if you have their contact, you can call them through their contact numbers and their available times to see. So this shows that this broker is registered and they've got the registered company number. So you can search to the companies that are registered within the country. You can set this registered number to see this broker w- official registered. Okay. The last thing I want you to look at is you see, Tickmill is a trading name of Tickmill Group of companies. You see, Tickmill is owned and operated within group of companies. Tickmill Group consists of Tickmill UK Limited, regulated by the Financial Conduct Authority. Registration office, you see, they have got an office in UK. You see, registration office, third floor, 2732, Old Jerry, London, England. So this way you see the office in Dubai. They also have an office in Dubai as a representative office. Their reference number is here. Tickmill Europe, regulated by Cyprus here. The registration, their office is here. You see the office is here. Tickmill South Africa, as we showed earlier up there, regulated by the Financial Conduct. Registration office number is here. Okay, you see Tickmill Malta, Seychelles, you see everything. So this campus shows you everything. First, it pays you according to the rollover rates, swaps, that it is transparent about its leverage, it's transparent about its office. Not only it's online, you can see it's physical, means physical for South Africa, Seychelles, UK. So this shows that this is a regulated broker. So my advice is you to look for regulated broker. So take a look at your regulated broker. First look at the swaps. As I say, look at the swaps, see that this broker pays swaps. Look at this leverage. As I say, a good leverage for you to trade it not exceed 1.100. This means that you preserve your capital. As I said, guys, this is not gambling. This is a business. This is investing. This is an investment you're doing. So you must find ways to protect your capital without losing your capital. Without losing your capital. So you look at things like that. So these are the main things I want you to look up when you're looking for a regulated broker to trade with. These are the main things which separate a regulated broker from unregulated broker. For whatever trading platform you're using, so take a look at this. Take a look at what I've shared with you today. Differentiate your trading platform. If a trading platform doesn't pay you rollover rates swaps, find another trading platform. Do your research. Look at their physical office, not online. Everybody you can compare to someone online. Physical office. As I said here, the address and everything. This shows that these brokers are graded. Look at their registration company number. Search it. Look for the country. Look for the registration number. Is this company officially reliable to trade with? These things, these four things I've showed you: swaps, leverage, contacts, and physical address. So these are the main things you want to look when you are looking for trading forex broker. So thank you, and please don't forget to subscribe to my channel. I'll be uploading more videos about the forex futures and the stock market.